Well, good morning and welcome. You're watching Market Cafe on ET Now. I'm Harsaita and with me is Ankita Saxena. Good morning, Ankita.
Good morning to you, Harsh.
So this is a show where we get you everything that's happening in global markets, and then we take you through, of course, global news, including global market news, as well as on the domestic front, what's the news to keep track of, what's buzzing, and what are the key stocks to look out for in trade today. So let's start off. Ankita is the one who takes up what global markets are up to. Ankita, take it away.
So, Harsh, yesterday, markets at this point are really not making any sense because the US job data came out and it was cooler than expected. But despite that, on the back of the fact that the US economy is not that strong because the labor market has cooled off, the stocks fell yesterday and the Dow Jones Industrial Average fell nearly 200 points. Now, as traders are assessing the fact that there is a spike in the oil prices and the latest job openings report that came in. Now, in February, the number of available positions dropped below 10 million for the first time in nearly 2 years, a sign that the once hot labor market supporting the economy is starting to slow. Now, while it shows that the rate hikes are really helping the labor markets cool off, it also shows that the economy is slowing, and on the back of that, of course, the stock markets dropped yesterday. The Dow Jones was down 198 points, more than 0.5%. The S&P 500 declined 0.5%. Both the indices snapped a 4-day winning streak. The nasdaq composite dropped again 0.5% in trade yesterday. So all the major indices in the US were in the red yesterday. The European stocks also closed lower as the oil and gas sectors gave up all the gains following the surprise production cut by the OPEC Plus alliance. And despite trading higher for the most of the session, the pan-European stock 600 closed down 0.05%, largely flat but in the red. Its second consecutive day of marginal losses. Now, in Britain, the British pound traded higher against the US dollar through the session and hit a 10-month high of $1.25 after the Bank of England's chief economist warned that domestically generated inflation remained a key risk. The FTSE was down 0.5% and CSE was marginally down 0.01% in trade, largely flat but in the red. So negative global handover coming in there. Harsh, tell us what are the movements in oil, especially after the OPEC Plus cut on the supply?
Well, yes, nearly 4% of the global oil production taken away. And what we're actually witnessing is that the pressure now has eased. That initial 4-5% solid rally that oil saw has now flattened out, and oil is nearly where it was in trade on Monday as well. So we're seeing largely WTI at $81 a barrel. We're seeing Brent at around $85 a barrel at the moment. But so no real movement there. But of course, a couple of moving parts to look out for. Ankita, as you correctly pointed out, there is a possibility of a slowdown in the US, as well as China hasn't picked up as well as most economists would have liked or would have anticipated, and most oil analysts would have anticipated, and that's exactly what's happened. And so one has to look out for those couple of moving parts to make sure, or to kind of extrapolate where oil will go from here. The other piece, of course, is the quantum of US oil reserves. That doesn't seem to be going up either, so that's pretty much flat as well. So US does not seem to be shoring up on oil either, largely because they want to stem that rise in oil prices to curb inflation. So they're trying to play a nice fine balance, but that's where currently oil is. The larger picture is it is where it is, where it was on Monday, maybe a percent or so here or there, but that steep rally that we saw in oil has now come to a close, and we're probably at a phase of consolidation.
All right, at a phase of consolidation is the word coming in for the oil prices. And moving on, labor demand declined in the US after job openings slumped below the 10 million mark in February, as we mentioned. Now, this is the first time that vacancies have tumbled below the 10 million since May of 2021. Now, available positions now stand at 9.93 million, recording a decline of 632,000.
Right. And let's move straight to global news. Long-time JP Morgan Chase CEO in his annual letter to shareholders flags off concerns around US banking sector. This is, of course, Jamie Dimon. He says that the crisis is not over yet and the repercussions will be seen in years to come. The stress on the financial sector caused by two bank failures in the United States last month is still a threat and should be addressed by a reimagining of the regulatory processes, according to the JP Morgan Chase CEO.
And Finland becomes the 31st member of the North Atlantic Treaty Organization, or as we know it as the NATO, marking a major shift in the security landscape of northeastern Europe. The move comes as member states sharing borders with Russia doubles. Do remember, Finland's accession is a setback for Russia. In response, Kremlin spokesperson Dmitry Peskov warned that Russia would be watching closely what happens in Finland, describing NATO's enlargement as a violation of the security and national interests.
Well, let's shift focus from faraway Europe to closer Pakistan. And Pakistan has gone ahead and raised their benchmark interest rates to a record 21% amid soaring inflation. The State Bank of Pakistan's Monetary Policy Committee raised the target rate by 100 basis points from 20%. The rates are now at their peak since central bank figures dating back to 1956.
And some more layoffs. Amazon lays off about 100 employees in its video game division as a part of its broader cutbacks. The move impacts workers at Prime Gaming, Game Growth, and the company's San Diego studio. Now, Amazon has struggled to capitalize on its resources in gaming, including through its Crown channel, an entertainment show on the Twitch streaming service. Twitch recently cut about 400 positions.
Well, let's move to UK. The UK watchdog has slapped a nearly $16 million fine on TikTok for breaching the country's data protection laws, including misuse of children's information. Authorities estimated that the app has allowed as many as 1.4 million UK children under the age of 13 to use its platform in 2020, despite the prerequisite minimum age being 13 to create an account.
And J&J unit files for a second bankruptcy to pursue a whopping $8.9 billion in talc settlement. Now, do remember, the company faces thousands of lawsuits alleging that the talc in its iconic baby powder, that is the iconic baby powder, and other projects caused cancer.
Well, and the focus shifts to US President Donald Trump, and he's pleaded not guilty to 34 felony counts on falsifying business records in the New York court. Trump denied all the charges which related to payments to keep people quiet, including over an alleged affair with an adult film actress.
And well, with that, it's time for us to slip into a short break. Don't go anywhere. We go domestic on the other side. And well, Dinesh Kumar Khara, chairman of SBI, is confident of broad-based credit growth, and the bank aims to cloak 14 to 15% credit growth in FY24. Now, he also said that the bank is receiving payment from the Adani Group, who have adhered to their repayment schedule so far. Listen in to this exclusive conversation he had with our managing editor, Nikunj Dalmia.
The year we are closing today, of course, have witnessed a phenomenal growth in terms of the credit, and as also it has been very broad-based growth. It is not confined to only few sectors. But I think the way the trends are looking like, it is actually quite positive, I would say that. And I would say that the trends which are there in terms of the outstanding proposals which are still being processed, so also the sanctions which you have given and which have yet to be disbursed. So all said and done, I would say that as far as the credit is concerned, there's a very clear visibility of the growth in the coming year too. And if we look at the broader macro, the demand seems to be something which is quite encouraging, and it is both in terms of retail as well as in terms of corporate. The kind of investment commitments which are shown by various private sector entities and also by the government of India in terms of the infrastructure focus which is there for the next financial year, which has been indicated in the budget. So it's about 10 trillion plus as far as the budget itself is concerned, plus 2.4 trillion from the railways. And invariably, the infrastructure spend has got a significant multiplier effect. So I would say that in view of all this, it is, I would say, the year uh, coming in, the financial year 23-24, we expect a fairly good growth opportunities. And I think we are quite hopeful that we'll get to see decent growth in credit too in the next year.
Can I safely say that in terms of credit growth, a number which everybody wants to understand right at the beginning of the year, because it's the most important number for SBI shareholders and for markets per se, you expect the growth momentum of 15 to 17% to continue?
Yeah, I would say that around 14 to 16% is something which I've been maintaining. So I think we should be in a position to clock growth somewhere around 14-15%.
We have seen a big surge in interest rates, and historically we've always maintained that the first uptick of an interest rate cycle is always beneficial for the banks because deposits, they get repriced slowly. Would you get advantage of that, sir, also in FY24?
Yeah, I expect that we will have a fairly decent advantage which should be accruing to us, because when it comes to the way our loan book is stacked, about 34% would be in EBLR and 41% in MCLR. And MCLR also is equally spread between 6 months to a year. So there would be, we still have some elbow room for passing on the interest rate. So I think it will give us an opportunity for NIM expansion for some time to come, even if the policy rates stabilizes around where it is. So I think, having said that, I would also like to mention that even in the last year, when we have seen so much of clamor for the deposit by various entities, our cost of deposit would have gone up just about 7 basis points in all. So I think that gives a very clear leverage to us in terms of our ability to generate better NIMs in the coming year too.
Well, moving on, Ajay Srivastav, who's the CEO of Dimensions Corporate Finance Services, believes that Indian investors will have mediocre returns till elections. Now, he also believes that investors could see a 15% return in the next 3 years, but will be back-ended. Listen in to what he had to say.
I would tend to believe that the returns will come in the latter part of the 3-year period for India particularly, because we have an election year and the government is going to ensure everything to ensure that inflation is not going to go out of control. So when you saw price control on steel, you saw action on sugar, now you've seen the debt mutual funds indexation benefit going away. So, in a sense, you will see Indian corporate to see profits are going to be capped out for the next 18 months till elections are over. Inflation is a big challenge. Unemployment is a bigger challenge in the country. And therefore, any political party will ensure that these levers or visible levers, which is the price of products, continues to be under control. And that's going to be the capping scenario for Indian equities, because moment you start to make a little bit of supernormal profits, you've seen government action to come and tap that supernormal profit. So therefore, I think Indian investors should brace themselves that till the elections, you'll have very, very mediocre return. Maybe post-elections and the global market becoming, some buying come from the overseas market, you'll see extraordinary returns perhaps after a very long, steady base. So I would say 15% return on a 3-year basis, reasonably possible, but it'll be back-ended.
Right, Ajay Srivastav, they're not very bullish with regard to markets. But we'll quickly slip into a short break. More on the domestic front on the other side, so stay tuned.
Welcome back. You're watching Market Cafe. Moving on to commodities, India has cut all the windfall tax on crude oil from 3,500 rupees per ton effective from Tuesday, which was yesterday. Now, the government had in July imposed the windfall tax on crude oil producers and levied on exports of gasoline, diesel and aviation fuel after private refiners wanted to make gains from robust refining margins in overseas markets. Now, instead of selling it at home. Now, my colleague Prakash Priyadarshi has this report. Let's take a look at what he has to say.
Yes, it's a big relief for domestic oil-producing companies as government has decided to withdraw windfall gain taxes on domestic crude oil production effective today. As per the notification issued by the Ministry of Finance, windfall gain taxes on domestic crude oil production has been reduced to nil from existing rupees 3,500 per ton. But it does not mean that the government has withdrawn windfall gain taxes on domestic crude oil production permanently. It is for the time being till next fortnight, because the decision that has been taken today is primarily based on the fluctuation in crude oil prices in last fortnight. But the government may take next revision as far as windfall gain taxes are concerned based on the current prices during next fortnight. However, when it comes to windfall gain taxes on petrol and ATF, as per new notification, it is still out of ambit of windfall gain taxes like last fortnight. But when it comes to windfall gain taxes on diesel export, as per the notification, the windfall gain taxes will remain there as far as diesel export are concerned, but government has decided to reduce it, 50 paise per liter from 1 rupees per liter. But one important factor that should be taken into consideration is that there is a possibility that the windfall gain taxes may increase further due to fluctuation in crude prices in global market, primarily due to the fact that the decision that has been taken by the OPEC Plus nation to take further production cut. So it would be very interesting to see as to how government will move further from here on, whether the windfall gain taxes is going to be increased further based on the fluctuation in crude prices in the global market.
Right, thanks for that, Prakash. Let me switch tack. While several global economies are suffering due to inflation, India has handled its economy quite well. That's the word coming in from Ajay Singh, who's the president at Asocam and of course the CMD at SpiceJet. My colleague Samir Dikshit, excuse me for that, had an exclusive chat with him. Listen in to that one.
Firstly, I want to congratulate the government for making India the bright and shining star in the global economic world at this point of time. I think it's something to be extremely proud of. The fact that when countries around the world have been suffering high inflation, low growth and low investment, India in fact has been exactly the opposite. We've shown high growth. We are the fastest growing large economy in the world today. Our inflation is under control and we continue to spend large amounts of money on infrastructure build out without raising taxes. So I think it's something to be proud of. We are a worthy leader of the G20 world, and we would only ask the government to stay on track. Just keep doing what they've been doing so well so far. Our job as Asocam will be to support them, to ensure that the India story is told to the world, and to act as a bridge for all our members, especially our 450,000 MSME members, in ensuring that all those members are able to play their role as part of Team Bharat to foster greater growth in our country.
Larger picture where you have been saying that the interest rate should be moderated a bit so that the timely payment could be done. What roadmap do you see, so?
No, so we feel that the RBI has done a fabulous job in controlling the interest rate in such a way that inflation remains low and external shocks are looked after well. But we feel that time has come that the RBI might want to consider signaling that the period of growth of interest rates is coming to a close now, because further growth in interest rate may adversely impact certain sectors like the auto sector, the housing sector. So we would only request that they consider, see people coming back to fly again. Loads are strong, yields are strong, and Despite all this, only 5% of Indians are flying, so there is great potential for growth. The main concern remains the cost of aviation fuel. Progress has been made on that. Several states have reduced VAT. I think 19 states in the last 2 years, and I want to compliment the Civil Aviation Minister, Mr. Sindhya, for a fabulous job done. But we would also request that aviation fuel is brought under the ambit of GST, and the states, the 3 or 4 outlier states that are still to reduce VAT should do that as soon as.
Just a question on SpiceJet, sir. The positive development that recently took place, that Spice Express has been hived off. Now, when can we expect the IPO or the upcoming process that you can share?
Well, this is an ASSOCHAM press conference, but you will hear announcement soon.
No, can we expect this financial year, 23-24? You want to come up with that?
Certainly not an IPO, but certainly that company will raise funds for its growth, and it looks like a very exciting prospect for them.
And well, EdTech major Byju's is in focus as it has appointed Ajay Goyal as its Chief Financial Officer. As CFO, Goyal will oversee financial strategy and management for Byju's. Now, a statement released by the company said that Goyal will work with the founders and senior leadership on strategy development, capital planning and financial analysis. Meanwhile, as per reports on the other side, Byju's is in process to raise 70 crore rupees. Let's go across to my colleague Aishwarya Patil, who has more details on this.
Well, Byju's is buzzing today. It's in focus for 3 key reasons. First one is the CFO appointment. Ajay Goyal, who has held leadership positions in Vedanta, General Electric, Nestle, Coca-Cola, has now been appointed as the CFO of the company. He will be heading the management as well as overseeing financial strategies for the company going forward. Now, another report this morning that came in says that Byju's has raised $700 million in funds, and it will be utilizing around at least $400 to $500 million of that pool to repay their debt. Now, overall, the valuation stands flat at $22 billion for Byju's, and till date, it has raised more than $5 billion. Now, the funding round of $700 million was led by 2 West Asian-based sovereign wealth funds and large PE players. While these 2 are on the positive side for Byju's, what's negative is that BlackRock has cut its valuation of Byju's by more than $11 billion. And this comes at a time when there's an issue with the valuation estimates as well as weakening global economic situation. Now, what are the triggers going forward for Byju's? We understand that they plan to list their arm Akash and come up with an IPO. Now, the IPO timeline has been extended by 10 to 12 months, as we understand. The other trigger point is the repayment of $1.2 billion term loan, which was secured in November 2021, and a declaration of its FY22 numbers, as well as its path to profitability, which is a questionable factor as well. And in December 2022, they renegotiated terms of faster payments of loans as well. Now, remember, in the past, Byju's has been under scrutiny. It had reported losses of 4,588 crores in FY21, and it's also been in the news, negative news in fact, for layoffs. It has laid off in February, it axed almost 1,000 employees, whereas back in October, it had retrenched about 5% of its staff.
Well, thanks for that, Aishwarya. Let me quickly take it to Aditya Puri, who was in our studios a couple of days back. He's the former MD of HDFC Bank, of course, but for those who don't know. And he's currently the senior advisor at Carlyle. And he says that not only him, but the world is bullish on India at the moment, and the next few years belong to Hindustan. He predicts that India will become the 3rd largest economy in the world in the next 5 years. And of course, let's go in and listen to his views directly.
World is sounding bullish. You hear the World Bank? What does the World Bank say? I don't know what Prime Minister Modi did, but he's woken up an elephant. You see the procession of the foreigners coming in. You hear the IMF talk, you see the way the country is treated with respect. So that is there. But there are fundamental reasons. इस दुनिया में कोई ऐसे ही नहीं होता. It is because of the position we find ourselves in. The world is slowing down. The US will probably go from 1.8 to 1% or below. Europe will be in a recession. China went from 10 to 6, it will come down to 3. Hindustan, Jindabad, 6 to 7%. But more importantly, we are structured in such a way that this is Hindustan ka time for the next few decades. Number one, we have a strong democracy, a democratically elected government which is stable, has clear policies across foreign affairs. I love it. Europe is telling us कि gas नहीं लो अपने आप, you buy more gas in one. So now it took a lot of guts to say, you know, we know what's good for us, which never used to happen. Same goes for defense. We are at the lead in environment and inclusion. You look at digital. We have maybe the largest, could be largest or second largest, mobile phones, internet usage, our India stack, UPI, etc., which will allow democratization of technology. Also, we have people who will allow us in services which will move to data services, which is a good export. And I would recommend the government look very carefully that our storage and other data storage things match global standards. नहीं तो लोग नहीं आएंगे. So that's digital. Then you come to the demographic dividend. People say it could be a curse. No. People are qualified. They can be re-qualified. And now with the working of remote, I think that in itself, as we go forward, out of every 122 people that come into the working age in the world will be from India. The demographic dividend is there. And then you look at the economy itself. So we are focusing on manufacturing, whether it's PLI, whether it is China Plus One, whether it is focusing on our strengths, whether it is MSME, whether what we want to do in semi-urban and rural India, just manufacturing. If you look at it, if we increase our manufactured exports by 0.5%, GDP goes up 4%. Right? We also have, whereas we do have high consumption, but compared to the world, very low. Whether it's cars, air conditioners, aircraft, motorcycles, all of that. So the demand is there. We followed very good policies. America, between the real rate of interest and their actual rate, is very far off. We will actually, I don't know what the RBI governor is going to do today, but we would almost move to a positive real interest rate. और जब दुनिया ने हमको बोला था फेंको पैसा, नहीं फेंका, so we have a good fiscal situation. We focusing on bringing inclusion, using various techniques, whether it's Jandan, whether it's subsidy, whether it's promoting manufacture, whether it's microfinance, you name it, or whichever, the missions on health, the health mission, the education mission. I want to be involved in trying to see that everybody gets healthy and gets credit, but not as a worker class. आपके जैसे
Sure. No, but I'm sure people are approaching you, and do you have the urge to go back?
मैं वापस. Available when able. But of course, India is a great place, and we should be proud of it. We are today the 5th largest economy. We'll be the 3rd largest economy in 5 years.
Welcome back. You're watching Market Cafe on ET Now. Let's go stock specific very quickly. The manufacturing part of Cyan, that is Cyan Business, is set to launch their IPO in a few months from now. Listen in to what the management has been saying about this particular announcement on their recent con call.
You may have seen the press release. The Cyan board approved and made a set of appointments to the board, to the management team, which I think are quite important to support our growth trajectory and also to enable the opportunities that we're seeing going forward. I wanted to take a moment to just introduce some of the members of the team and also to just lay out how the organization will function going forward. Firstly, as you know, we are also in the process of launching an IPO for our business Cyan DLM, which is the manufacturing part of Cyan. So to facilitate that, the first decision that was made late last year was to ensure that we have independent management teams running both organizations, that is Cyient, BLM, and Cyient. While the IPO might take another few months to finally come to bear, we've already started the process of running both businesses independently as of the 1st of April and have an independent management structure.
And well, with that, it's that time of the show where we tell you what are the stocks that you need to keep an eye out for in today's trading session. And for that, we have Shesha and Vamakshi in the studio. Good morning to both of you. But first up, Shesha, tell us what are the stocks on the radar? What are the stocks that we need to keep an eye out on in today's trading session?
Hi, good morning. So a whole host of companies will be in focus on the back of their operational updates. And first up, we'll talk about BDL or Bharat Dynamics. And that is because the company has recorded a turnover of 2,500 crores for the full year versus 2,800 crores that the company had reported in the previous year. They say the decline is due to delay in receipt of imported electronic items and critical explosive materials for OEMs. They've also said that design changes in production of naval products is another reason why we've seen a decline on a year-on-year basis as far as revenue is concerned. But management commentary meanwhile is quite optimistic. They say the shortfall that has come in the current year is expected to be recovered in FY24. So on the back of this operational updates that have come in, Bharat Dynamics will be in focus today. Moving on to Marico then, this one also on the back of their operational update. The company has informed that consolidated revenue in the fourth quarter grew in low single digit on a year-on-year basis. International business, however, maintained its stellar growth trajectory as it posted mid-teen constant currency growth. And as a result of moderating raw material prices, gross margins meanwhile are expected to expand and drive reasonable growth in operating profit this quarter on a year-on-year basis. IEX will also be in focus yet again on the back of operational update, where the company said that they've achieved 9,212 MU volume in the month of March, which is an increase of about 12% on a month-on-month basis. The prices meanwhile have declined by about 23% in the month of March on a month-on-month basis, and this is due to cooler weather in the month of March. However, over here as well, the commentary is quite optimistic. They say while high temperature and increased demand is expected in the coming months, supply side liquidity is expected to improve, and that will benefit the company. JSW Steel, and this is because the company has been declared as preferred bidder from the Department of Mines and Geology, Government of Karnataka in respect of auction, and the projected iron ore resources stand at 32.08 MMT. So on the back of this on the back of the company being declared as preferred bidder, keep an eye out on JSW Steel as well. Two other companies in focus on the back of order wins. NBCC, they've won orders worth 448 crores, and HG Infra will also be in focus because they've received letter of acceptance from Rail Vikas Nigam Limited. The project cost stands at about 466 crores. On the back of order wins, these two counters will also be in focus today.
Right, thanks for that, Shesha. Let me quickly move over to Vamakshi, who's been going through all of those brokerage notes. So Vamakshi, give us an outlook of the important ones.
Well, absolutely. Let's first start off with ICICI Bank. We have a note that has come in from Citi. They've opened an upside 90-day catalyst watch for the counter. They're expecting stronger than consensus Q4 FY23 results. They're also estimating to see upgrades over time. Credit demand as far as retail, SME and business banking is concerned is likely to hold up as well. In fact, they're expecting 5% quarter-on-quarter and 19% year-on-year growth in FY23 broadly across segments. So given those factors, Citi has definitely opened a 90-day positive catalyst watch, maintained its buy rating, target price of 1,100 per share. SOE banks, that is state-owned enterprise banks, will also be in focus. JP Morgan says that PSU Bank's operating environment is turning out to be the best in a decade. Top PSU banks with the likes of SBI as well as BOB have already reached ROAs of over 1%. Asset quality has also improved. PSU banks have steady positive earning revisions is what they're expecting, and they're also advocating buying larger banks which have a very strong deposit franchise. In fact, the top sectoral picks are Bank of Baroda, ICICI Bank, SBI as well as Bajaj Finance. We also have our eyes on USL. There is a note that has come in from Citi. They're expecting pressure on the near-term performance there. However, they do see some growth challenges going ahead. They're expecting slower than expected pan-India rollout of innovation. In pre-popular portfolio, they're expecting growth trends to be lower. They believe that the near-term business performance could also lead to further earning cuts. So on the back of those factors, they've actually opened a 90-day downside catalyst watch on USL, maintain a neutral rating given a target price of 815 per share.
Right. Thank you so much for that, Vamakshi. And along with that, a slew of banks have come out with their quarterly updates. And let me just quickly take you through those. Of course, HDFC Bank to start off with, the second largest bank in the country. 17% loan growth, quite healthy, 6+% when I'm looking at it sequentially. That's where the loan growth stands. But more importantly, the deposit growth, 8.5+% sequentially is the deposit growth that HDFC Bank has clocked this particular quarter, 21% on a year-on-year basis for full year FY23. Truly impressive numbers with regard to where the deposits stand. Let's quickly take it to IndusInd Bank, also very strong on the growth front. Advances growth at 6.5+% sequentially, 21+% on a year-on-year basis. We're also looking at deposit growths of 3.5% nearly on a sequential basis and 14.5% on a year-on-year basis on the deposit side for IndusInd Bank. Federal Bank, another outlier within the banking pack, good solid growth, 20+% on a year-on-year basis with regard to advances, nearly 4% up sequentially. And when I'm looking at deposits, again, very impressive performance, 17.5% on a year-on-year basis, the deposit side, but sequentially up 6% on a QOQ basis. So very strong from Federal Bank as well. Catholic Syrian Bank had already declared its result, but let's look at AU Small, which was the other bank which declared results. 5% QOQ growth. No surprise, because AU Small has been doing that pretty much every quarter, 26.5% on a year-on-year basis. But again, on the deposit side, impressive, 32% year-on-year on the deposits front, 13.5% sequentially on the deposits front. The fastest growing bank both on year-on-year as well as sequentially on the deposit front is AU Small. RBL, tepid performance for yet another quarter. We're looking at deposit growth, nearly 4% sequentially, so that's pretty strong, but 7.5% on a year-on-year basis. We're also seeing good growth though from RBL on the advances side, 5+% on a sequential basis, 16% on a year-on-year basis from RBL Bank. Bandhan Bank also came out with its numbers, 10% on a year-on-year basis, 11% on a sequential basis. Mind you, the portfolio was affected by a few write-offs, and that's why that particular adjustment has come through. And we're looking at 12% on the deposits front for Bandhan and nearly 6% sequential growth for Bandhan on the deposits front. So a couple of banks showing very good results.
And well, that was the Q4 update for all the banks. But with that, NBFCs will also be in focus on account of their Q4 updates. M&M Finance has witnessed a strong growth in disbursements, wherein March figures were up by 42% on an annualized basis. My colleague Vamakshi is, of course, here in the studio with us to put all that into perspective. Take us through all the numbers, Vamakshi.
Well, absolutely. As you rightly pointed out, a strong growth that has come in from Mahindra and Mahindra Financial Services. They're seeing some very strong growth in terms of disbursement. March 23 disbursements actually grew by nearly 42% on a year-on-year basis to 5,600 crores. When we look at the Q4 disbursements, they grew by nearly 50% on a year-on-year basis, while FY23 disbursements ended strongly at nearly 4,95,000 crores, up nearly 80% on a year-on-year basis. So strong disbursements definitely coming in for M&M Finance, and that has actually resulted in gross business asset growth of nearly 7% on a sequential basis. Asset quality, however, has stolen the show for this particular counter. Gross stage 3 ratio has declined by nearly 130 basis points quarter on quarter and 300 basis points year on year, and this has taken it possibly to an all-time low of nearly 4.6%. The management says that no additional provisions will be required over and above the ECL. Apart from that, Bajaj Finance also came out with its Q4 update. We saw that the core AUM for the company grew to 2,47,350 crores. Now, this is an upside of nearly 29% on a year-on-year basis and 7% sequentially. Now, keep in mind that growth in Q4 on the AUM front was expected at 6%, so definitely a strong update coming in from Bajaj Finance. Overall, when we look at the new loans booked during the Q4, that grew by around 20% to 76 lakh, and in fact, this is the highest ever new loans of nearly 296 lakh that the company has ended up booking in FY23. The liquidity position remains strong. Deposit book stands at nearly 44,000 650 crores, up nearly 45% on a year-on-year basis. And in fact, the company has recorded the highest ever increase in customer franchise in FY23. And lastly, we will be keeping an eye out on HDFC. The signed individual loans amounting to nearly 9,340 crores have grown by nearly 12% on a year-on-year basis. Individual loans sold in the preceding 12 months amounted to 36,910 crores. So overall, a strong set of updates coming in from all NBFCs.
Right, thanks for that, Vamakshi. But with that, we're completely out of time on this edition of Market Cafe. From Vamakshi, myself, and everyone who puts the show together, thanks so much for watching. Of course, the market will take the action forward, so stay tuned.